Hello from Otet Markets. This is Aurora. I will be with you to review the US inflation data and market reaction. We somehow surprised with the data published so far. The inflation in February increased slower than expected. Both CPI and core CPI increased by 0.2% on the monthly scale, despite 0.3% expectation. That means that on the annual scale, core CPI fell to 3.1%, down from 3.3%, less than 3.2% expected, as you can see here in the screen. And headline inflation fell to 2.8%, down from 3% and lower than 2.9% overall market expectations. However, these numbers, I have to say that in several months, we had inflation increasing, and with 1 month falling inflation, and that's also slow decrease, cannot change too much in the market. Yeah, I mean, yeah, it somehow can pause some trends, but it cannot change the market directions. Let's go and see the chart. Before that, I have to mention that for next week Federal Reserve meeting, this data cannot change anything, can change nothing, because already market more than 97% price on not cutting the rate, holding the current rate for this meeting. And now we have to say with this data what we can expect from next Fed meeting and what we can expect. I mean, in the dot plots and so on, what we're going to have there on the expectations for the mid and long term. But anyhow, for this meeting, nothing changed. As the market reaction, let's check the charts and see how the market reacted. Anyway, I have to mention again that initial reactions of the market, they are nothing. They have to wait more and see the overall market reactions, and then we can check the charts. But still, the initial reaction is natural somehow. US dollar index, which was falling already, with this data, we can say that okay, the pressure could be persist in the market. But before having these data, we were expecting to see some correction on the US dollar index, slightly stronger correction. But now with this data, we can say that the correction is somehow in the short term is unlikely, even though it can be slider correction. I mean, around 100, between 103 and 104 marks, but still this downtrend, which in this area can continue here, this area, but above this area, to see the correction above this area is somehow unlikely, because the data sounds like that the inflation somehow is controlled. But still, as I mentioned, overall geopolitical tensions, trade war, and all these ongoing tensions around the market, they are not, they can support the demand for the global international demand for US dollar index, which means the dollar index would be still in the demand, and downtrend is not so likely, but correction can be limited. That's what we can say with this data, because as mentioned, the data, yeah, shows that the inflation is somehow under control, but after several months of increasing the inflation with one downturn, we cannot say that okay, the data already, the market already changed, the market tone already changed. So we need more evidence to say that the inflation is under control. As for the stock market, these data means that the stock market downtrend still would be persist. We cannot say that these data, they are the market changing data, but downtrend in the stock market, especially the S&P 500, could be limited. I mean, not that limited, could be slower down. We would say better in this way, that the downturn in the stock market will be slower. We can see slower downturn in the market, but these data, they are not such a big numbers or such a big surprise that we say that okay, these data already did change the market attentions, or they change the market tone. So the downtrend, they are slight optimistic. So the market downside movement could persist, but with slower pace. These data at the same time would be positive for the gold, because both weaker US dollar and under pressure stock markets, and with uncertainty around the world, all these signals, they are the positive signal for the gold. So we can say that the gold would be in demand, and gold uptrend, slight uptrend could continue. These data wouldn't support the oil price, but where the Bitcoin could be somehow supportive, and for the Bitcoin and other cryptocurrencies could be somewhat supportive. And we can say it's not a big positive, but would be the some slight optimistic, would bring the some slight optimistic in the cryptocurrency market. But as I mentioned, it's not such a big deal. We can say, okay, that's the big market changer or the big or game changer. So generally, what we had in the data and market reaction and expectations. If you had any other question, don't forget to write in the comment section or try to get back to you as soon as possible. Have a good time. Bye-bye.